Hi, I'm Alex, welcome to the channel and thanks for tuning in. So in today's video we're talking about Paysafe. Now it's been quite some time since I last talked about Paysafe on the channel, but I've noticed an increasing amount of comments in relation to wanting an update on Paysafe. In this video we'll cover everything from the lockup expiration, the various classes of investor and their different motives, and the company's strategy and the potential upcoming catalysts. If you're an investor in Paysafe, then this is not one which you want to miss. Before we get into it, please smash the like button. In our battle against clickbait on YouTube, when you do smash the like button, it's so helpful in letting the YouTube algorithm know that it doesn't need to only recommend the clickbaity, misleading videos. It's massively appreciated, it helps out the channel so much, and so thank you so much. If you're new to the channel, then make sure you're subscribed. If you want to see more content, then check out the Patreon for the live Discord, the live video calls, and other things. And as always, I'm not a financial advisor. This video is purely for educational and entertainment purposes only, but let's get straight into it. So a quick reminder for anyone who missed any of my more recent Paysafe videos. In line with my strategy outlined in the first video I ever posted on Paysafe, I exited my position upon completion of the SPAC merger, with my concern being a potential selling pressure initiated by the expiration of the lockup for the PE investors, being Blackstone and CVC. So I exited my position in Paysafe around 25% higher than the current stock price. However, still a slightly disappointing return on the basis of the potential which I believe Paysafe has. It's important here to make clear that my reason for exiting my position in Paysafe was solely driven by this dynamic and not at all by company specifics, its market or the strategy or anything like that. All of those I remain bullish on. As a reminder, I always said that once this dynamic had played out, that being the private equity investors selling their stakes in the company, that I would reconsider investing into the company. I've shared a lot of analysis on the channel before demonstrating how Paysafe is, and it remains still at this point in time, significantly undervalued versus its peers, and I still believe that to be the case. But in line with my original strategy, I'm waiting for that PE exit to occur before I consider reinvesting. Clearly, this sale has not occurred yet, but we know from previous videos that there's a ticking clock which they have to exit their investment by. They're financial investors who make their return through exiting investments, and they're structured to do this within certain time periods, so their exit is a matter of when, not if. Now it's also worth remembering that there is a meaningful investment from PIPE investors in Paysafe. The lockup period for these investors is approaching, and we have seen in many other SPACs this year, PIPE investors exiting their investments quickly for good returns. Indeed, this is part of the dynamic which has given SPACs a dirty name this year, but the important point here for Paysafe is that these investors at their current price are not sitting on a phenomenal return. Many of them also strategic investors, so are aligned to Paysafe in the long run, and so at current valuation levels, I would be very surprised if we saw much of a sell-off from these PIPE investors. I could be wrong, I don't have a crystal ball, but it's a consideration. So why has the stock price performance been so disappointing for Paysafe since the completion of the merger? It's not a result of increased selling pressure from the private equity investors, so what's the reason? Well, personally, I think there are two dynamics fundamentally at play here. One is related to the broader market, the other is related to the SPAC market. Neither of these are groundbreaking revelations, but they're important to be aware of and understand what impact this has and could have over the coming months and years. So firstly, let's talk about the broader market dynamics impacting Paysafe's recent stock price performance. Clearly, there's a lot of concern in the market around inflation, driven primarily by money printed by governments to fund the response to the pandemic. The implication and expectation of this is an increase in interest rates to combat this. And now we have discussed this dynamic many times on the channel before. As an interest rate increase is quite likely, and this is the current expectation in the market, this is the sentiment in the market which is then impacting valuations for growth stocks. This isn't permanent, it changes and evolves, but undeniably this has some impact on Paysafe's stock price. Now the second dynamic which I think is worth discussing here is the fact that Paysafe was once a SPAC. Now hear me out. While the SPAC market did bring great returns for many investors throughout the course of 2020 and early 2021, a number of dynamics have changed this, which in turn have had a knock-on effect on many companies. So during 2020 and early 2021, we saw record levels of SPAC fundraising. More and more SPACs were raised, and the increased volume of capital was all chasing the same number of potential acquisition targets. The result of this is often quite high valuations paid for companies which were actually probably slightly too early stage to having been acquired. Now, before you jump on me and say that Paysafe is not too early stage, it came from private equity ownership, I totally agree with you, but hang on with me here. The result of these dynamics has actually left many wary of SPACs, and almost all SPACs and ex-SPACs being branded unfairly or fairly with that same brush. That being that they're too early stage to the companies that have been acquired. They now have unprecedented levels of cash on their balance sheet, with limited expertise and discipline for deploying this cash and investing this cash in opportunities which drive a high ROI or return on investment. Now my view really is that there has been some contagion of this effect onto Paysafe, and Paysafe has been tarnished with that brush. And in the case of Paysafe, that's not fair. People who spend time to understand the company and do their diligence appreciate the strong profitability, the previous institutional investor ownership. People who spend time to understand Paysafe and do their diligence appreciate that this just isn't true. The company is highly profitable. It has a really experienced management team who have great expertise in deploying capital in opportunities which do drive a high ROI. So when investors take the time to understand the company, those concerns get allayed. But I still do believe there's this degree of skepticism among many new investors, the fact that it is an ex-SPAC. Paysafe needs to shed this legacy and stigma, and it's doing all the right things to do this. It's delivering strong financials and profitability, it's executing its growth plan, and also winning support from analysts in the form of new coverage and upgraded price targets. Currently, Paysafe is covered by 8 analysts, all of whom have buy ratings on the stock, which is much higher than most other ex-SPACs have. Now, the cynic within me suggests that this coverage is being initiated by so many investment banks who are keen to line themselves up as part of a beauty parade for Blackstone and CVC in order to help them out on the sale of their stake. Who knows, but I think this is definitely a dynamic worth keeping in mind. All that said, lots of positive analyst coverage is always good news for a stock, regardless. Now, one additional important consideration for investors is the upcoming earnings for Paysafe, which are expected on August 16th. Paysafe will be filing its Q2 results, and a positive set of results will be good news for the company and for its stock price. So in summary, I still believe Paysafe is a good company. I think they're aligned to good growth verticals, which will enable them to grow faster than the market and to capture market share. I think the management team are strong and capable of delivering the strategy, but I do think the recent stock price performance has been driven by broader market conditions rather than selling pressure from any investors particularly. Once those private equity investors have sold their stake, this has always been the point in time which I've said since my first video that I would reassess investing into Paysafe. So this is definitely something I'm keeping a very close eye on. And of course, as always, I will let you know as soon as something changes. Anyway, thank you so much for watching. I hope you enjoyed the video. If you did, please smash the like button. If you're new to the channel, make sure you're subscribed. And if you want to see more content, then check out the Patreon. As always, please let me know your thoughts and comments in the comment section below. I find it so interesting to hear all the different perspectives and opinions, so please get involved. Thanks again for watching, and I'll see you in another video.